Edward Stevenson, TimelessWealth.net, and the following is basic technical analysis on winning Brands Corporation, traded under the symbol WNBD. Here I've illustrated this resisting trend line in red. That's this red trend line on a slight slant. Basically, this represents a mark that has been restraining the price from breaking or closing above it. As you can see, coming off of this trading session right here, the price peaked at 0.165 or 1 65 hundredths of a cent. However, this resistance mark pushed the price down and it fell to a new low over here. Afterwards, the price rallied, tested this trend line again at 0.139 or 1 39 hundredths of a cent, and again it was pushed back down. And several times the price tried to test this trend line and was unable to break it. That is until this trading session right here, where we saw a technical breakout occur. The reason is twofold. One, the fact that the price closed and broke above this trend line, and as trend lines are broken, that is resisting ones, they become supporting ones, just as when supporting trend lines are broken, they become resisting trend lines. And two, the fact that the price broke past parabolic SAR, which was resistance, and that would be these dots right here. So if you can see those, now it's trending underneath the candles, and this is normally considered a bullish signal. And notice that all of this occurred on above average volume. So these bars right here would correspond to the volume that came in on these trading sessions here. So what I'd like to do here is talk about some supporting resisting levels and what really occurred in this area right here. First off, I mentioned the volume came in and it was above average. That displayed strength in the market. The fact that as the price appreciated, the volume grew and supported the price as well. This little pullback right here, you can see the volume declined, which was good to see if you're a winning Brands Corporation long. It basically means there's not that great of a desire to sell this security as compared to people who are buying it. You can see the volume on up days is much larger than the ones where it declined. Secondly, coming off of that technical breakout, we closed in and around the high on the day right here, and we formed this gap in price. So that would be the distance between this trend line right here and this one here. And basically, gaps tend to fill because these are emotional gaps, so the emotions are running high. People saw that we broke out of this what looks like a 6-month descending channel or falling wedge, whatever you want to call it, and that's why this 1 cent mark is so key to hold, and this is a must hold supporting level. Let me explain. Right now this mark correlates with the 10-day simple moving average, so reference in top left hand corner right here, as well as the 100-day simple moving average and even the 200-day simple moving average. So as you can see, this is quite a key mark, so keep that 1 penny mark in mind. If you'd like to be very specific, keep 0098 in mind, and that would be the low on this trading session right here. So that too corresponds with these moving averages, followed by which we have the 1 1 tenths of a cent mark, and that'd be this right here. This trend line I've just drawn with the dashed line right here. So as you can see, at some point in time, especially this period right here, we were trapped in this channel and kind of drifting sideways. So this is a key mark that the price broke above, as well as the 1 3/10 of a cent mark, which is currently the top Bollinger Band and dates back to supporting the price in the past. So let's just draw that in as well. Something like this. So as you can see, the price has found support at this level in the past, particularly this area right here. It wasn't until the price broke past it, rather below it, that this became resistance and restricted the price from breaking above it until this area right here. And of course, the last level of support that I'm looking at is a mark that we broke past coming off of Friday's trading session, and that'd be the 1 4/10 of a cent mark right here. So let me just that line. On this chart, these trend lines aren't exact, but it's just a general idea to keep in mind. And all these resisting and supporting trend lines, I'm kind of basing it off of prior highs and lows and resisting and supporting levels, such as this mark right here. You can see 1 39 hundredths of a cent, more or less the 1 4/10 of a cent mark. You can see that this overall chart's a little bit more messy than my charts usually are, but that's only because we're testing resistance levels dating back to early 09 and even late 08 as I flip over to the weekly chart and show you that perspective. So that's always nice to see. That means there's strength in the market and the bulls are finally responding to this rather long-term descending channel, as we've just broken out. Now on the flip side, as to resistance, and this is something key to keep in mind in the event that you are swing trading or just a long in Winning Brands Corporation and looking forward to the price appreciating in the market, we're looking at a key supporting level, or rather a key resisting level at 1 65 hundredths of a cent, so 0.165, and I'll indicate that with this horizontal line in red. Following the 0.165 mark, or 1 65 hundredths of a cent, we have the 1 8/10 of a cent mark, so this right here, and this would date back to corresponding these candles right here. Last time the price rallied on well above average volumes, so take a look at these bars right here underneath the candles that correspond to the price action up here, and we haven't seen anything along these lines up until this period right here, and when I flip over to the weekly chart you'll see exactly what I mean. But these are just some key things to keep in mind. Following the 1 8/10 of a cent mark, I don't want to jump too far ahead, but the 2 cent mark is always key for two reasons. One, the fact that it dates back to being resistance back here when the price broke past it was support, so it has quite some history back here, but the 2 cent mark is always psychological resistance as well, just as the 1 cent mark is, just based on the fact that a lot of people who get in around this mark tend to sell for a double or 100% gain when the price appreciates twofold, creating some resistance around this mark. So just keep these key marks in mind. So resistance, let me indicate that in red, 2 cents, the 1 8/10 of a cent mark, the 1 65 hundredths of a cent mark, support at 1 4/10 of a cent, 1 3/10 of a cent, 1 1/10 of a cent, and the most hold level, just 1 cent, or specifically 0098. Okay, so here we are with the weekly chart, which means every bar under candle in this chart represents 1 week worth of price action. The segment of the chart that I was annotating on the daily chart was this period right here, as you can see, beginning in I believe that's July. And what I drew here was that resisting trend line I had in the beginning of the video, and just to show you how the price broke out, so you can see that happened last week, and it broke above this resisting trend line, which we said was now support. So it's looking something like this. 2, as you can remember, on the daily chart we broke past parabolic SAR, which was a bullish signal. On the weekly chart the exact same thing happened, so only this past week did the price break past parabolic SAR. Now it's trending underneath the candles, and more importantly the volume here is oddly similar to the one we see on the daily chart. Look at how the volume is increasing as the price is increasing. So that's just some key things to keep in mind. And as for the supporting and resisting levels that we went through on the daily chart, you can see they kind of correspond with this chart as well. For instance, the 100-day simple moving average is at 1 1/10 of a cent or so, and that corresponds with one level of support we talked about. We have the 50-week simple moving average at 0096, which is more or less that 0098 level we talked about on the daily chart as well. As well as a 20-week simple moving average at 0099, so that's even closer to that 1 penny mark we talked about as well. So just remember to keep these key things in mind. You can see that this security has a interesting history of trading, what with the lows and the highs and the way it moves, and this is a longer term look at what has happened and what usually happens to this chart when this kind of volume comes in. So that's what I'd look for, and that could make this an ideal trading vehicle, and for some maybe even an ideal investing vehicle, depending on what your style is. So once again, this was Edward Stevenson from TimelessWealth.net. I encourage you to give my site a visit and join our free newsletter at TimelessWealth.net. What we do is we send out overlooked trading and undervalued investment ideas, and to date our members have been having quite a bit of success with our past trading ideas, so it's definitely something worth giving a try. Thank you for listening.